I'm a DD boy, going to decentral, minty NFT, I'm a DeFi use, being crypto poor but JPEG rich.
But what is the current state of DeFi? Is it alive or does it need resuscitation? We will find that out in our next panel, which is moderated by Mr. Tom Crown, so please welcome them to the stage.
This is on. It's on. Yo! What's up, Decentral Austin? Good to be here. We have 3 of the top most humble experts on the decentralized finance space. Very exciting. So I think a good way to start this is, what is DeFi? And Taiki, do you want to open this up here? Awesome.
So DeFi stands for decentralized finance, and the simplest way to explain it is, people are trying to create financial products on chain via the use of smart contracts. I think that the easiest example is, if you deposit fiat to a bank, right, your money to a bank, you earn, what is it, like 0.5%? And the bank will lend it out to borrowers via businesses, credit card lenders, and they'll maybe charge 10% and they'll take a cut off that, right? But through DeFi, you essentially cut out the middleman. So the number one money market, the borrowing lending protocol, is Aave, and you can deposit Bitcoin, Ether, stable coins, earn yield on it, and anyone in the world can permissionlessly borrow assets from you. And if you're lending out your assets, then you can earn pretty decent yield, and you can also borrow money without asking anyone. So if I wanted to borrow money from a bank, then I have to fill out forms, maybe get on a phone calls or whatever. But through Aave, I can just borrow assets. And money markets allow for very, very different various yield strategies. A simple one is like, let's say, Bitcoin. It's really hard to earn Bitcoin right now, or earn yield on Bitcoin now. So you can borrow stable coins and then maybe pay 2% to borrow stable coins and earn 8% through DeFi protocols. So those are various DeFi strategies, and I think a lot of people are attracted to DeFi because of those high yields, and obviously those yields have gone down because most yield is paid out in the native token. So on the way up, the fundamentals of DeFi, totally amazing, right? It's like, oh my god, like DeFi is the best thing ever. On the way down, fundamentals suck because the yields suck. But you can find value in protocols that are actually creating value, generating revenue, and I think that's where the most of the opportunities are right now.
I think like adding on what is DeFi, and maybe I'll introduce myself because I think we only went one by one. I'm Dreamer, president at Kingdom Studios. We develop DeFi Kingdoms. I have about 10 years in traditional banking, investment banking. And so I was a part of one of the larger institutions, I won't name, I guess, on this stage. And I saw how we've been doing banking and finance the same way for a very long time. Every bit of innovation wasn't necessarily to help the broad population, but to cater to and service the broad population, but help a very small centralized group. So one of the main things that drew me away from that life to this life was the dream of sharing the love, sharing the innovation, and advancing on that utility in terms of decentralized services like DeFi, decentralized finance. So what else can you do? I think there are many protocols out there looking to solve for lending, looking to solve for financial assets and derivatives. It's a very hard thing to do. However, with smart contracts and technology we have, it's very possible, and it's been ignored for a really long time. So in the future, if DeFi were to continue to get support and evolve, and many things really have to happen in order to have that mass adoption, I could see all of the services that you can imagine through traditional banks, through investment banks and others being offered through the blockchain, through DeFi, which if you think about all the money that is backing many of the services there, converting to blockchain-based services, the potential there is unlimited in terms of what farmers or investors or participants could benefit from.
Yeah, we got our 4th panelist. It's a surprise panelist, Jazir.
Howdy.
Well, we just started and we're kind of just going through what is DeFi, and we had 2 weigh in. If you want to weigh in, and Grant kind of weigh in with how you would describe DeFi or what it is. Just very basic right now.
Yeah, look, I think DeFi is a really great way for people to get access to promising projects that otherwise would take until essentially IPO to become accessible for public investors. So you see a lot of volatility in the upward and downward direction, but if you look at the way that equities performed in the 80s and 90s, like there was a lot more gains to be made. Ultimately, it's because you could access these assets that represented like real value accrual, and I think DeFi is the first sort of asset class we've seen in decades that allows the common person to see some of these gains that have been otherwise kept for the private markets.
And to add on to that a little bit, I'm Grant, by the way. I work at CADEX. It's a decentralized exchange on Cadena. DeFi also really pushes forward this idea of like self-sovereignty and being able to like reclaim, what you're doing with your finances and your data, and cutting out sort of like traditional finance and stopping, or not stopping, but working to really move away from this like middleman mentality where you're lending out money to a bank to essentially only receive like a very small slice of the pie. And DeFi is one of the first exercises in actually being able to claim that whole slice for yourself based on the assets like you provide and you choose to act with.
So like if we expanded on that, even just trading assets from one account to another, traditionally you have to put in the request, somebody has to review it, somebody's got to click a button to accept it, you're waiting hours for confirmation, then days for settlement. Just to move money, it's a whole headache, and you're probably paying dozens if not hundreds of people in that process.
And it's to move money that you already own, that like it's your funds. You should be able to decide what to do with them, how they move, and everything there. So,
but if I know your wallet and I have money to give you, I send it to you, and as fast as the blockchain can service it, you have it. So that's one way. All of the money that is being paid to service that traditionally can now be shared, right? It's not being consumed. When you think about lending, to go through a whole underwriting process and have it be limited by a centralized group to say how much you can or cannot receive, it may or may not be related to the actual risk of the lending. It's related to your history, it's related to the institution and the underlying assets. But many like algorithmically driven or decentralized lending protocols are solving for that in a completely different way. So when you say removing the middleman, I think in something as simple as moving assets or borrowing money, you really are simplifying it with technology that could end up being much more reliable in the end.
also, like traditional lending doesn't take into account a person's, their home life, the circumstances they've grown up in, and it's really not an equitable system. It doesn't look to assess how that person has, what has impacted them or affected them in their life to maybe enable them or prevent them from gaining access to loans or other financial tools. So DeFi really just says like, okay, like what can you do on chain with the assets you have on chain? Like it's all you, like do what you want.
Yeah, and most loans in DeFi are over collateralized because you're lending money to people that like you don't really know, right? So you have to deposit $10,000 worth of Bitcoin if you want to borrow, let's say $5,000 worth of stable coins. But I think in the future, I think DeFi isn't dead, but it's just really new, and there has to be more innovation. And I know Vitalik wrote this paper recently called like soulbound tokens. It's kind of like building an on-chain credit score. So of course, if you're lending to a new wallet with like no transaction history, then yeah, maybe that person has to deposit X dollars of collateral to borrow Y dollars worth of stable coins and whatnot. But if I have thousands of transactions on chain on my wallet, then maybe I have a credit score, a certain credit score, where I can take on under collateralized loans. I think those types of products have to be built out in order for DeFi to really serve the masses, because right now most DeFi products are only made for people that actually have money, just because transaction fees on Ethereum are very high, and there are alternative ones that do offer lower fees, but I think most people are attracted to DeFi for the gains, and right now the gains are hard to be had because the market is down. But if you can see through the noise and actually look for products that are generating value, then I think those are products that you should farm, tokens that you should farm. And yeah, I think that's the best way to navigate the markets right now.
Yeah, I actually personally had the problem, the access to financial tools. I couldn't get a mortgage. My bank told me I could. I went through the process and they said, oh no, you're self-employed, you need 2 years income returned. I don't know. I ended up not being able to get a mortgage, and that has definitely put me on to DeFi, giving these options to kind of blindly, to anyone, very equal. I dig it. You touched on it a little bit. This can be our second topic. So is DeFi dead, or are we just trimming the fat? What do you guys think?
There's no way DeFi is dead. I mean, there's still 150 billion in TVL across all assets, or all platforms. I do, however, think this is a bit of a reckoning. I remember for SIFchain, when we raised, we started in, I think, August of 2020, and our pitch slide said like 5 billion in TVL, and then 10 billion and 15, and we had to keep updating it as we were raising. So this is the first time that that number has started sliding down, and it's also the first time that people are seeing what are otherwise DeFi stalwarts kind of not being as impactful either in terms of revenue or token price. But it does seem like this industry cycles every 2 to 3 years in terms of what the top names are. And if you thought you had alpha and you registered for a few programs or whatever, it's time for you to either reevaluate or cycle to potentially a new set of assets or new chains or new whatever. But no, DeFi is here to stay.
Yeah, I think like in order to answer that question, you have to look at the driver. So we know what the environment is today. We see the prices, we see the APYs, we see how things have adjusted, but what's caused this? Is it an idiosyncratic driver related only to crypto and DeFi? Or is it something much bigger, and what we are seeing is more of a byproduct? You look at the macroeconomic landscape, you look at regulation, you look at COVID and everything that's happening there. You look at inflation, unemployment rate, you follow the stock market, and you start seeing correlations with Bitcoin and low cap tech stocks. And if we see how all of that is performing in the world, we follow the fear greed index and see that we're at extreme fear. This is not unique to crypto, but we're feeling the pains even more. If you think of a traditional large cap stock, is down 5%, and then you look at the tech sector, then you look at small cap tech, and then you look at Bitcoin, and then you look at altcoins, there is correlation. And I don't think that there's any driver that has hinted that the innovation move of DeFi is anywhere near dead. It is a very, very strong test. And we've seen like a Lehman Brothers-like event in the last month, and I won't name what, but what happened with traditional finance when that happened? What happened after 2008? People learned, people innovated, people adjusted, regulation adjusted, and then we got a stronger, better system, depending on your own view. As a result, I think that's going to be very similar with decentralized finance. We have to improve our risk management. We have to find ways to adjust so that maybe we aren't as linked to the whole world, but currently we are.
Yeah, you brought up a really good point about correlation. I feel like crypto historically has been uncorrelated with traditional asset classes, but as this most recent, maybe 2020 to 2022 rise has come about, we've seen a lot of traditional capital entering, but treating it like it is another fintech project or another startup. And it would be good to see DeFi products, number one, try to diversify more, look at things like commodities, look at things like, novel sort of crypto economic value generators that won't exist in fintech to become more uncorrelated. But then I think at the same time, understanding these markets requires more sophistication than just put your money here and farm. I like to often tell people, most DEXs earn their yield through liquidity mining. And that's an interesting space, but it's not trade volume. Understanding differences like that and knowing sort of where's the yield coming from so that you are not yourself the yield, I think that's going to kind of cut out some investors and then bring in new investors that have a deeper sophistication.
Yeah, I think just to expand on that, the type of tokens that are available, I mean, you mentioned commodities. If we think about traditional assets, assets flow from one type of, I guess, asset to another, right? You have equity that is representing a higher volatility, therefore a higher return than your traditional bonds. You have commodities like gold that people see as a safe haven asset. You have different currencies that follow what governments are doing, if the overall inflation relative to GDP and employment. But we don't have as much of that dynamic in DeFi, in crypto yet, but we can. We have the ability to. I think when I was working at the bank, I was actually onboarding large institutional hedge funds to trade Bitcoin-based futures. And when we started that whole like due diligence process, the number one reason they wanted to is because they saw crypto as a safe haven asset. That would hint that it isn't highly correlated with equities. And people were looking to run to crypto when things were in trouble with fiat currencies, equities, and other. But as we pointed out, in the last year to two, it's actually shifted to be very different. So back to the question, what innovation needs to occur, what adjustments need to be made to have it be more decentralized, more detached, more unpegged from traditional assets.
Yeah, and one thing that's really hard is like how to value these crypto tokens, because I know some funds try to use traditional finance methods to value, projects based on cash flow, but you can't really do that because, let's say there's a price to earnings ratio of 10, but what percentage of those earnings are subsidized by token emissions? And most of the time, it's like projects are emitting more tokens than they're actually taking in revenue. So just because people have a really hard time valuing tokens. Like I do this full time, and I can't even value these tokens, right? I'm just kind of guessing at this point. So when people don't know how to value tokens, then on the risk spectrum, when people want to take a risk off, people will just dump the DeFi tokens first. And I think that's what's contributing to this negative sentiment in DeFi of oh, is farming dead? Farming doesn't work anymore. But I beg to differ. I think there are lots of opportunities via farming. But you have to look a lot harder now than let's say 6 months ago.
I think that's important. I don't know how many people might be unfamiliar with farming, but essentially the reward you're getting is that token. So being able to value the project the token represents is super important. I know you joked you're kind of guessing, but what do you do? What has been successful to value? You might look at a nice APY, you might see a community, but where do you get scared, or where do you get more comfortable with a project or an overall token?
Yeah, I think it comes down to product market fit. If you're launching a fork of something that already exists on 5 chains, I'm less inclined to check out that project. But when I discovered DeFi Kingdoms, I was like, oh, it's pretty new, it's pretty innovative. So I nibbled with it, right? I allocated small percent of the portfolio. And one project I really like right now is I don't mean to shill this thing, but I'm just giving an example of GMX. It's a perpetual trading protocol, and it's actually making money. You can actually track how much money is the protocol making, how many fees it's generating. So I think actual metrics matter a lot more now, because in a bull market, people will just buy things that are going up, and it's kind of fun. It's it's kind of fun. But in these moments, you really have to figure out, okay, does this team have actual money in their treasury? I know a lot of projects that ran out of money because they never diversified their treasury in the bull market. So a lot of projects are either rugging or just leaving outright. So what I look for is, does the team have at least 1 year in runway? Where's the money coming from? What's the TVL, and what is the trend, right? Is it built on a particular L1? Does it have product market fit? Things like that matter a lot, especially because I'm risking my own capital, right? Staking it in these protocols, earning these tokens. So I really have to feel safe about will this team rug or something like that.
I really hear what you're saying about, or empathize with what you're saying about the treasury aspect of things. But on top of that, you also need to say okay, well, is there a treasury, and is there a DAO that's effectively managing that treasury? Having a treasury that's just sitting there with $30 million in it that people are, and that's the shilling point of the project, where it's oh, we have this huge treasury, and it's this is what the protocol is all about, is doing cool treasury stuff, investing in other projects. But are the people who are operating that treasury informed with what they're doing and how they're actually deploying those assets. That needs to really be taken into account as well, because like the underlying like fundamentals of the project could be sound, but as soon as you start to like decentralize and have the treasury be run by a DAO, I think that needs to be highly scrutinized as well. You need to really make sure that the projects you're investing in like are effectively managed at all levels.
Yeah, and I saw like a governance proposal today and yesterday of like DAOs like running out of money. So there's like a proposal for Lido to sell like 10,000 ETH in their treasury so they can have 2 years of runway to pay 50 people. And I think Tribe, Faye, they had a proposal to like sell off like a bunch of governance tokens that they hold, other project governance tokens, like not, yeah. So, I think most devs are working on their project and they're like less concerned with, I guess, like treasury management. But when prices start going down, it's like, oh, it's like everyone looks around, it's like, oh wait, like we kind of need money. So,
yeah, for sure.
And that adds extra sell pressure across the board. And one day it'll turn around. I don't know when that time is. We're all, like no one knows. No one has a crystal ball. But in the meantime, I just think it's best to hold assets you have a conviction in. And if there's ways to earn organic yield, that's like the best way to go about it.
Nice, very nice. So what needs to come next in DeFi? We touched on it a little bit, but what needs to be built? What is the future? What do you guys see?
I think, I said a few times innovation, and I don't want to like overuse that or like oversimplify it either, because it's hard to think of something new that will work, that people will like, that they'll put their money at risk for. So you can't just sit around and be like, why aren't anybody innovating? Because everybody's trying. It's just you see 90% of what's worked, and maybe you try 10% to do something different. One thing that DeFi Kingdoms, I think, has been recognized for doing something different is taking DeFi, something as simple as a DEX, making it look and feel like a game, so that people don't understand. People who do not understand like the fundamentals of DeFi, liquidity farming, staking LP tokens, can start to understand it with simple things like, okay, it's not a DEX, it's a garden, and you don't have to stake a token. You plant seeds, and the plant seeds grow fruit. That starts identifying a little bit of innovation, but also lowering barrier to entry. It makes it a little bit easier to understand. So you can do that through education. I know Coinbase Wallet is looking at not only onboarding a lot of users, but giving you access to what things are. I think a lot of people hop in the Discord and Telegram and just get destroyed and run away because it's the wild, wild west. So definitely better on-ramps, better education, and I would say better user experience, whether that's through gamification, whether that's through making it simpler to use or understand, or protecting people to not get ripped off, rugged, or tricked. It's a big one.
Just like this idea of like abstracting away these complexities is absolutely the next step that like DeFi and I think crypto as a whole is going to be moving towards. The traditional way to like tell people about projects, I remember when I was like getting started doing stuff in crypto, everyone would just be like, oh, like read this white paper or read this like very highly complex technical article, which like, sure, cool, totally doable, but for most people, I would say that that's just not necessarily that achievable of a thing. Like not everyone is doing crypto or doing DeFi full time. So for these people to come in and then be sort of like force-fed like hyper-technical concepts and have either the expectation is that they have like a CS or econ background or something like that is just going to turn off a lot of people. So this idea, like what DeFi Kingdoms is doing, where you're essentially like taking a DEX and turning it into something like very highly palatable and also enjoyable to use, amazing. It's just incredible. And that's absolutely the next step for DeFi and for crypto.
And if we think of traditional banking again, how did that work? Were they going around saying what they're doing in the background? Well, no, maybe that was one of the bad parts of it, but they made it very clear what they're selling. I think we need real world application. We need more real world application so that people can say, I need a loan. Should I go to my bank or should I go on the blockchain? I want a credit card. I wanna buy an option. Should I go to a traditional broker or should I find something on the blockchain? And I don't think we have that mass understanding of the availability, how you even onboard, where you go from there, how you offboard. And that's going to really set the stage, I think, in the next phase of DeFi.
Yeah, I think two things that come to mind for me, one would be education. So I know, hey, look, like this is complicated math or it's complicated engineering. It's nice to make things simple, but the innovation's happening ultimately at the tech and econ side. And I think if you want to understand risk, it's important that either you do get the serious background or at least you find an educator who can explain it to you. We all do know this after things like a Terra crash or these various other platforms that have risk, like just because they explain it well or there's a lot of evangelization doesn't mean that like it's safe for people to necessarily put capital behind them. And I think the other side is more on the sort of legal/organizational bit. I know as you guys are talking about like, hey, you know, how do DAOs manage treasuries and, you know, so on. I feel like we have this mix of these like companies essentially that have all this ridiculous red tape to try and stay in DeFi. And you have these people who are just anonymous. You have no idea what they're doing, kind of voting on whatever. Ideally, there would be a little bit more trust and flexibility to kind of merge those two worlds. And I think that's really where like legal, like, you know, people like LexPunk or whatever, like, or the groups I should say like LexPunk, like that's where they innovate. And it's kind of necessary so you can have, you know, the quality of corporate governance with the, let's say, ingenuity of DeFi.
Definitely. That's like another amazing point. I mean, there needs to be this delineation between like the actual like structure behind the DAO, like from the legal side, and then like a software engineering company. It becomes like a major issue when like let's say there's like a US based software engineering company that's offering the project, like and they also are dealing with like token issuance. That gets into like having to deal with securities and securities law. And if you're a US based company that's issuing a token, there's just so much more you have to do there. So you can actually like transfer ownership to another entity to actually deal with the token and have that be a legal representation of the DAO. That removes a lot of the risk for, you know, one, the company itself, but also it enables the holders to have like true governance power over that legal entity. And this is what we're starting to do at CADX, where we have this, you know, bifurcated legal structure where we have like our US-based engineering company, you know, a association that handles the DAO and token issuance, and then basically all of the funds in the treasury. And that actually, I think, is improving a lot of how like we're moving forward as an organization and what we're able to accomplish. It gives us a much clearer path on like what we can and can't do. It eases the load for us in many ways. So.
We are out of time. I think we have enough time if we want to just real quick go down the line and tell everybody who you are and where they can find you, and we'll get off the stage before they pull us off.
I'm Taiki. I run a DeFi farming channel on YouTube, so you can just look up my name, and you know you'll see a bunch of Pepe Farmer frogs, and you know I make those thumbnails.
I'm Grant Gerber. I'm the Chief Governance Officer for CADX. You can find me on Twitter at KDXFrogman.
Dreamer, President at Kingdom Studios, developing DeFi Kingdoms. Twitter is DreamerDFK, or just go to DeFiKingdoms.com.
Hi, I'm Jazir from SifChain. You can check us out on Twitter at SifChain, SIFCHAIN.
Right on. Well, thank you guys. Thank you for everything. I learned a lot. Hopefully everyone out there did too.
Thank you, everyone.
Thank you.